Let me also welcome on board then Sunny Agarwal from SBI Cap Securities joining in on the show right now to talk about his sense of the markets. Sunny, hi, afternoon. Good to have you on the show. It's been a decent recovery in April. What do you think this month has in store for us?
Yeah, hi, good afternoon, and thanks for having me on the show. Yeah, definitely, I think decent recovery in the month of April. Again, what we have witnessed is that the companies which are reporting healthy set of number, at least meeting the street estimate and guiding for a decent growth as far as the earnings are concerned. Those companies are holding up, and in fact, few large cap companies are also trading close to the life high. So again, market I feel has become a very narrow and stock specific market. So companies which are likely to report healthy set of numbers, those companies are being rewarded. And companies where there is a miss as far as the earning estimates are concerned, or there is a kind of downgrade in terms of a growth outlook, there we are seeing a street is punishing those companies. So going forward again, over the period of next 3 to 6 months, we feel that market will reward only, it is a kind of bottom up stock pickers market. So the companies which are likely to perform well over the period of next 3 to 4 quarters are likely to be on radar of investor. Case in point, Mahindra and Mahindra yesterday reported a very stellar set of number. So both SUV as well as tractor segment performing well. So there we have seen a kind of strong up move today, and we believe the fair value of the business is close to 3,500, 3,600 rupees. So that will continue. Among the PSU bank basket, on one hand, we have seen a very good set of number from Indian Bank. So there again, we feel there is a value that lies there, trading at 0.9 times 1 year forward price to book. So we feel the fair value of Indian Bank is close to 650 rupees. On the other hand, today, as we are speaking, Bank of Baroda has reported a slightly weaker set of number. So slippages has increased, and estimates are we have seen a miss. Need to see whether it is a one-off or whether there is a some problem in a certain part of the portfolio. So it is punishing the Bank of Baroda. So again, going forward, I feel ultimately market will gravitate towards the companies which are likely to report healthy growth over the period of next 3 to 4 quarters.
Right, yeah, BOB is pretty much at the session lows. A good 10% knock is what that stock has taken right now. We'll get an analyst and try and dissect those numbers in greater detail as to what went wrong with BOB's performance in the quarter gone by. But Coal India is also set to report its numbers, and let me take it across to Ashesha to find out what to expect from the numbers this time.
Well, yes, we are expecting stable set of numbers from Coal India this time around. Revenue, consolidated revenue could come in at about 36,500 crores, which will be an uptick of 2% on a sequential basis and a marginal downtick of about 2% on a year-on-year basis. As far as margins are concerned, they could contract a tad bit on a sequential basis. We're expecting consolidated margins to come in at 32.3% versus 34.4% that the company had reported in the third quarter. Remember, they've already reported their volumes, which have come in at about 199.7 metric tons, which is flat on a sequential basis and a marginal downtick of about 1% on a year-on-year basis. But realizations, that is expected to decline by about 3 to 5% on a sequential basis. Remember, e-auction premiums have been muted. FSA realizations have also been muted in the quarter gone by, because of which realizations are expected to contract on a sequential basis. But management commentary on the outlook going forward on volume growth guidance for FY26 and FSA pricing and e-auction premium trends will be keenly awaited. All in all, we are expecting stable set of numbers from Coal India this time.
Right, okay, that's the take coming in right now on what to expect from Coal India. But Sunny, how is it that you've mapped the earnings season so far? And let me keep IT out of this, because that, of course, was a clear eyesore. But you did flag off BOB, for instance, right now. Where is it that you've seen positive surprises? And where do you think, the disappointments still await us?
Yeah, again, what I feel is that the result season so far has been mixed bag. So there is no one structural trend we are seeing across the sector, like even within IT pack, which is a clear sector which is not liked by the street at the current juncture. So yesterday, Coforge reported a very good set of number over there. backed by the very robust deal win, $2.1 billion kind of deal win, which usually a large peers like Infosys and TCS report. That is at least giving a confidence that the company can continue to report a 15% kind of growth in FY26. If you look at banking sector, a clear-cut outperformance by ICICI Bank, HDFC Bank. On the other hand, we have seen a slight disappointment from likes of Kotak, or for that matter, Bank of Baroda today reported a weaker set of number. So again, I think across the sector, we are seeing a kind of mixed bag number. So it's more of an stock specific or a bottom up market so far. Coming to the sectors which were not doing well, so cement, at least we have seen a sequential improvement in terms of profitability. So all the cement players are reporting a decent Q-on-Q improvement in EBITDA per ton metric. So on that base, we feel that going forward, that is in FY26, the industry can report a 6 to 8% kind of volume growth. And backed by the recent price hike taken by all the cement major, we feel the profitability can further inch up in the over the period of next 3 to 4 quarters. So cement, the trend has been similar across all the companies. Most of the companies have reported sequential improvement in profitability, and that is likely to continue in FY26. So yeah, I'm coming to auto again. It has been a mixed bag. So on two-wheeler side, we have seen a very strong number from likes of TVS Motor. Among the passenger vehicle side, Mahindra and Mahindra has reported good set of number, whereas there was a disappointment from Maruti side. So kind of mixed bag across all the sectors.
Right, so those are the sectors that Sunny is looking at this point in time. But other than that, Kunal, I just wanted to have a chart check on PNB because this counter has been in focus on the back of the news flow of late. But given the fact that we have a weaker set of earnings coming in from BOB, that's definitely hitting the sentiment. Even SBI could not perform that well. But PNB, what does this 95 odd levels mean for PNB? Because I was just looking at the past 6 months. I believe that at these levels, the stock actually tries to find some ground. But do you believe this could be the case yet again?
Well, I think there could be a chance that maybe the stock could drift a little bit more lower because, what's happened over the weekly charts for PNB over the past 2 weeks, where the buying had stopped as such, the uptrend had taken a pause for PNB. The stock showed signs of bearish candlesticks over the last 2 weeks consecutively, and that's where I think you're seeing the effect of that playing out this week, where right at the start of this week the stock is already corrected from 102, 103 levels to now almost 94, 95 mark for PNB. That generally indicates that this could probably be at least a 1 to 2 week kind of a downtick for the stock price, which means potentially another 3% could be in the offing on the downside. So I sense that maybe closer to the 91 mark or 90 levels is where the trade could look a little bit more attractive for PNB and not at current levels.
Okay, that's that on PNB and the other PSBs. But in the latest, in the Bhushan Power and Steel case, after ET now reported that JSW Steel may move the Supreme Court against the verdict on liquidating the company, sources are saying lenders may also file a separate plea. Ankur Mishra, my colleague, is here with the details.
Yes, sources say that Bhushan Power and Steel lenders will move a review petition in Supreme Court against the order which was given earlier. Remember, this will be a separate petition whereby we also understand that JSW Steel is also planning to move a separate review petition. The two-member bench had earlier ordered that the liquidation of Bhushan Power and Steel should happen because the earlier implemented plan of Bhushan Power and Steel does not stand. In fact, the lenders will need to return rupees 19,700 crore as per earlier order, and after the liquidation the new bidders can arrive. But for now, all the stakeholders have come into action. Earlier, DFS Secretary also told ET now that lenders held a meeting with government regarding the same. Since all the stakeholders are involved, we understand that they will move Supreme Court staking claim on their part, while on one hand JSW Steel will say that they had followed the process as per IBBI. They have moved to different courts, but also lenders who may not want to return 19,350 crore because the money has already been paid to lenders, and that kind of provisioning needs to be done in this quarter if this order needs to be implemented. So all in all, first JSW Steel did plan to move Supreme Court, but now we understand even lenders are planning a separate review petition in top court.
I have already reviewed with all the banks, all the lenders, and we have taken a position. We have studied the judgment. We have got our advocates' views on the judgment. Now we take a view in the government. How do we approach the judgment? Okay. So we'll finalize.
Coming in from the DFS secretary on the JSW resolution. In the meantime, just scanning through the market right now, while BOB, Indian Hotels, Union Bank, Bank of India, these are all names which are cracking quite hard. But look at the leadership names on the same hand, M&M and Bharti. And Kunal, I think, these are those true blue leadership names which continue to give or rather move from strength to strength, right?
Well, yes, absolutely, Aisha. In fact, over the last many months of this market volatility, we've actually seen both of these stocks, they've managed to stand their ground quite firmly. In fact, at a point where I remember Bharti Airtel, with the entire telecom space was struggling, you'd actually seen Bharti Airtel, coming back closer to that 1800 mark, which was the previous major swing high for the stock, and then breaking past about those levels once the markets managed to find its feet back again. So I believe that's a very strong quality signal that stocks like Bharti Airtel, M&M, to a certain extent, the likes of HDFC Bank, etc. These are top quality stocks from the large cap names. They can shield portfolios from major part of the market volatility, and more importantly, when the markets get back into an uptrending mode, these stocks they deliver and get back into a consistent price uptrend. So I think in that context, these stocks they continue to look very attractive. In terms of levels, I would believe that M&M has a certain resistance around the 3150 mark. Today also, I think the stock made just about a high closer to that 3150-ish levels on the spot, and from there we've seen a mild bit of profit booking. So I think once that level gets taken out, we may see additional bit of momentum coming back into the stock.
All right, so that's the take coming in on M&M. But Kunal, just wanted to have your take on some of these staple names, because after a while we have seen stocks like Nestle as well as HUL, they are making into the top gainers for Nifty 50. And given so many news flow around the mock deals happening, at least what we believe is that the demand for staples will stay intact. But give us a sense that technically, where do you see these stocks headed? Any attractive opportunity?
Yeah, there seems to be now a defensive tilt which has come back, and that's one of the reasons why you're seeing the FMCG pack, starting to outperform. Godrej Consumers is the other stock which I think has been doing fairly well for itself. You've seen Nestle, Marico is the one which has been one of the stronger performers. Britannia, HUL, these are the stocks which have also recovered in the last 2-3 weeks. But interestingly, I think what we have also seen is a lot of divergence across the FMCG pack, because it's not as if that all stocks are now trading above their longer term averages and they are trading with the same degree of momentum as well as volumes. You have few odd names which are performing very well. Marico, for example, the stock has been doing reasonably well. Godrej Consumers, Tata Consumers, these stocks have done reasonably well. ITC has managed to make a good comeback in the past 2-3 weeks, where the stock has come back about 430, 440 kind of a zone. So I think there are strong outperformers, but then there are few of the other stocks which have been underperformers as such. So that could make the sector look a little bit more interesting over the near term. I would still believe that the likes of Godrej Consumers, ITC, HUL, Nestle, Marico, I think these are the stocks which can still be bought at current levels. Also with the fact that if the market gets into a little bit more of a high beta or a high volatile zone, there seems to be a case where FMCG stocks can stand to outperform.
Okay, that's the take coming in on the FMCG names. Just looking at the market construct right now, Polycab, Alembic, CG Power, these are all names which are reacting to its numbers. Polycab, in fact, has seen a top-line uptick of nearly about 25%, 33% of a revenue uptick coming in. That stock has eased off from the session high, still higher by roughly about 2% or so. For Alembic, it turned out to be a little bit of a mixed bag. The margins have seen a dip down of about 178 basis points, and then revenues, they saw an uptick of about 17% and profit saw a marginal downtick. But what you can't take your eyes off from is BOB and the kind of sharp slide that the stock has seen after its numbers. Let me take it across to Gaurav to try and dissect where the disappointment really came in from. Gaurav?
Well, yes, when we talk about BOB, although the profit has increased only by 3%, when we look at net interest income, it has declined almost by 6% on a year-on-year basis, and the main reason being that the cost of fund pressure is seen somewhere in the quarter. So first, let's look at cost of funds. When we look at for the bank, the cost of funds has gone up almost by 13 basis points, while on the other hand, yield on advances have gone down almost by 11 basis point on a sequential basis, and as a result, when we look at net interest income as well as net interest margins, we saw some kind of pressure. In fact, net interest margins for FY25 came in at around 3.01%. It is actually at a lower end of the guidance that the company had given of 3 to 3.10%. Another point of some disappointment here is that when we look at credit cost and slippage ratio, so there is some kind of pressure built up in the asset quality as well, because when we look at gross NPS, they have actually declined, but when it comes to credit cost, that has gone up almost to 0.43%, which is a 13 basis point of uptick. And when we talk about slippage ratio, that has also gone up to 1%. So definitely two factors which are actually impacting the stock price negatively. First is that the return ratio, specifically the net interest margin, has gone down, and second is there is some kind of pressure in the asset quality. So we will be watching out on how the commentary is going to be, where the pressure is building up from, but as of now we are seeing some kind of pressure building up in Bank of Baroda. As we speak, the stock is down almost by 5%. So definitely watching out on how the commentary is coming from the management.
Right, so all eyes on that. Thank you so much, Gaurav, for highlighting what did not go well when it comes to Bank of Baroda earnings. But just a few minutes left before we should shop, and the markets are at the day's lowest point. Nifty as well as Nifty Bank, they both are facing a sharp knock in today's trading session. But Kunal, help us with your BTST ideas. But before that, I was just listening to you that VIX at 19 mark would be a concerning factor. So is that a case now?
Yeah, it's a concern for the markets because rising VIX on the short-term charts leaves a very severe dent on the near-term prospects as well as the trend for the indices. So far, I think the Nifty is not showing the kind of impact the VIX is actually exhibiting, but incremental rise in the VIX could lead to an eventual sudden correction which could happen. So the levels on the upside is 19 plus. If we close about those 19 marks, say for a couple of days consecutively, then that could probably lead to some bit of selling pressure which could come back into the index. And on the downside, I think if we retrace below the 17.5 odd mark on the India VIX, I think there could be a chance that maybe the Nifty could stabilize yet again. So these are the two levels for India VIX which we are keeping an eye on. In terms of the trades, I would look at two sell calls, and both of them are from the PSU banking names. The first one which I'm recommending is the sell on Bank of India. The stock has confirmed a breakdown of sorts today, breaking the 113 to 114, which is a major support for the stock in the near term. So would recommend a sell with a target of 107, stop loss to be kept at 114. And Union Bank is the other stock which is confirming a break below its 200-day moving average today. So sell with a target of 116, stop loss at 124.
All right, so those are the two BTST, or rather STBT ideas, because both are the sell calls coming in from Kunal. But Sunny, help us understand that any stock or sector that you believe can actually outperform in the near term at least?
So we believe within Autopack, the tractor as a segment is reporting a very good set of volume growth. Again, Mahindra & Mahindra is a market leader over there. And on the top of that, with a robust commentary coming from Mahindra on passenger vehicle SUV side, we believe that Mahindra & Mahindra will continue to be a clear outperformer going forward. In addition to that, one small cap company, CCL Product, has reported a stellar set of numbers yesterday, followed by a very robust commentary during the day on the analyst call. Again, the management has guided that EBITDA will continue to grow at 15% in FY26, and volume growth can be in the range of 10 to 20%. So we believe CCL Product, which is trading at 1 year forward close to 18 to 29 price to earning multiple, is a decent addition in the portfolio. Maybe today's stock has risen significantly. Buy on day with the right strategy as far as CCL Product is concerned.
Okay, that's the take coming in right now on some of those earnings contenders, as the case with IHCL as well. That stock is lower by a good 7% after they delivered a good set of numbers. There was, of course, an exceptional item as well in there. In fact, let's hear out what MD and CEO Puneet Chhatwal had to say about the numbers and, of course, the visibility of the business going forward.
For the next couple of years, it's absolutely demand is going to outpace supply. Definitely it's not going to lag behind supply. So there are 3-4 reasons for it. The GDP growth numbers may be adjusted downwards, but still it is around 6%. Now whether it's 6.4 or 5.9, it's still a good growth scenario given what's happening in the world. People are having higher per capita income, and the new or what you call the nouveau riche people, want to experience more, whether it's your food and beverage, or it's your hotel stays, or it's your luxury goods. Everything they also want to have, right? They have always aspired to have that. So I think that also will benefit the sector. And finally, with all the new destinations opening, there is something new happening which people have noticed and had never noticed before.
All right, so that was the management of IHCL. But taking a look at the markets, Nifty has broken below that 24,400 mark and sustaining at those levels. Let's see whether or not the 24,300 is protected. India VIX is now above almost 5% of gain is what we are seeing on that particular index. 19.25 is the level that we are seeing. And Nifty Bank, that's actually knocking the doors of 54,200 levels. Almost a 700 points of cut is what we are seeing. And definitely that's been led by the PSU banking space. But other than that, within autos, it's Hero MotoCorp, M&M that has done well. Add to that list is Eicher Motors, and Bharti Airtel too has been one of those defensive names where we have seen almost a 2% jump coming in. But let's also look at some of the earning candidates, because definitely coming tomorrow, all eyes will be on Dabur, United Breweries, Tata Chemicals, one of those high movers will be in focus. Other than that, Voltas and PNB are some of the earning candidates. But with this, I would like to thank Kunal as well as Sunny. Thank you so much for taking the time out and speaking with us, and also helping our viewers with their STBT as well as BTST ideas.